Hello, this is The Global View on a Wednesday. I'm Andrew Gagan. Good you can join us again here at AusBiz. Let's get across what happened overnight. Equity markets were mostly positive, with MSCI's gauge of global stocks up 0.75% to a record high. On Wall Street, the S&P 500 and Nasdaq were higher, with the S&P touching a record intraday high and extending gains to a fifth session. And the small cap Russell 2000 index, well, it's risen more than 7% so far this month. Investors are anticipating a flurry of major earnings results. Of the 64 they had reported as of Friday, 80% had topped analysts' expectations. Well, shares in the world's largest package delivery company UPS rose as it projected higher revenue for 2026 and announced it's cutting 30,000 jobs and shutting 24 facilities as it reduces deliveries for Amazon. Its peer FedEx also moving higher. Boeing swung to a fourth quarter profit, while among the airlines, American Airlines fell, despite issuing a 2026 profit forecast that topped estimates. JetBlue also losing altitude on a wider than expected quarterly loss. US airlines are also contending with mass cancellations triggered by severe winter weather across the east coast of the US. Shares in General Motors accelerated after reporting higher fourth quarter core profits. Most tech stocks gained, including Apple, Amazon, Broadcom, Microsoft and Nvidia. Now, Meta, Microsoft and Tesla are due to report earnings tomorrow morning our time. And US health insurer shares slumped after the Trump administration proposed a much smaller than expected increase to the 2027 Medicare Advantage rates. United Health tumbling almost 20%, also weighed down by disappointing revenue forecasts for 26. CVS and Humana also falling heavily. Well, US consumer confidence slumped to the lowest level in almost 12 years this month, amid mounting anxiety over a sluggish labour market and elevated prices. The Conference Board said its consumer confidence index plunged 9.7 points to 84.5 in January, which could see households becoming more cautious about spending. And that will be a consideration for the Federal Reserve, which has begun its two-day policy meeting, with investors broadly expecting interest rates to remain unchanged. Attention will be on guidance, with traders alert to any signals around the Fed's leadership outlook. Well, US Treasury yields were mixed ahead of the Fed meeting. The US 2-year yield falling to 3.56%, the 10-year was around 4.23%. Markets are priced in no chance of an interest rate cut at this week's meeting, with a total of around 2 more cuts in the easing cycle. And the US dollar has sunk to a near 4-year low against most major currencies as traders keep watch for possible coordinated currency intervention by US and Japanese authorities. The Japanese finance minister saying they will continue to take appropriate action as needed, working closely with US authorities. And the Aussie dollar, meanwhile, has pushed above 70 US cents, currently at 70.1. Well, oil prices have surged as producers are hit by a winter storm that has cut crude production on the US Gulf Coast. Brent crude futures up around 3% at $67 a barrel. Gold prices are pushed higher as economic and geopolitical uncertainty drive investors to the safe haven metal. Spot gold up around 3% to around $5,160 an ounce. Spot silver also up more than 3%. And Bitcoin is trading at around 89,000 US dollars. Let's get across those moves now with a focus on Wall Street. Peter Cardillo joining us from Spartan Capital. Peter, welcome back to you. And well, can we first start with obviously that consumer confidence read? That is of concern, is it not?
Absolutely it is. You know, if the consumer continues to sour his mood, obviously it means less spending ahead. And you know, we're in a K-type expansion, which basically means that not everyone is enjoying this expansion. The wealthy and the very wealthy. So they're continuing to spend. And the mid to lower income earners, are beginning to tighten their belt. And there are several reasons for that. Interest rates, yields remain high and interest rates remain elevated. And that means that their monthly credit card charges continue to stay at the higher end of the level. And of course, you also have this sticky inflation. Grocery prices here in the States are continuing to move higher, and so it's becoming a real problem for the middle and lower income earners. And so, yes, this confidence drop is an alarming point, and it probably will reflect somewhere along the line on consumer spending.
What consideration will the Fed be paying to this? Obviously, they'll reveal their policy decision tomorrow, but expectations, they are going to leave rates on hold. What would their thinking be?
I think they stay on hold. There's no chance that they're going to lower rates. Um, and I think that Powell is soon going to be confronted with another problem, and that is a dollar crisis. As you saw, the dollar index was at a 4-year low, a 2026 year low, a 52-week low, and we believe that that the dollar is headed much lower. There's a good possibility we could see 90, 92 on the dollar index, and that means that yields are going to have to stay elevated. So the labor market consideration, the sticky inflation that we have, and now a dollar problem could mean that the Fed's statement tomorrow might be somewhat more hawkish than perhaps we anticipated.
And Peter, that de-dollarization trade is only further driving investors into precious metals. What are your observations? There's been some remarkable gains there with both gold and silver.
Indeed, you're right. We've seen a super bull market. In all my years of Wall Street, I've never seen a rally as strong as the one we've encountered with gold and silver. And it's a warning sign. It's a warning sign. I guess, there is some element of truth that perhaps maybe it's now in a momentum market and it's attracting speculators. But I think the fundamentals are much more in tone for higher prices, and those fundamentals have not changed. And with a weak dollar, that only means that we're going to see higher prices for gold. Now, of course, somewhere along the line, there will be a day of reckoning. There will be a pullback, but I think the pullback would be temporary. And it's hard to say where we're going. Are we going to 6,000? Are we going to 7,000? Are we going to 10,000? Well, I'm going to paraphrase something that my mentor taught me many years ago, Dr. Franz Pick, that gold prices someday would go to 5,000, 10,000, and 15,000, and he based it on the problems that we are encountering today, and fiat money and government spending. And if you look at government spending in some of the major countries, including the United States, obviously, it's really out of hand. So it's hard to say where gold can go in the short term.
And Peter, meanwhile, on the equity market, we're continuing to see those gains, as I mentioned overnight. How critical is this week going to be, given we've got some of those key mega cap tech stocks reporting?
Well, earnings have been coming in on target, and in some cases better. One or two misses, obviously, but basically so far they have not disappointed. And beginning with tomorrow, we're beginning to get some of the Magnificent Seven returns, and I think that they key for the market to continue to rally. But I also want to say, while the fundamentals of the stock market, which are the earnings, obviously, are good and support the valuations, I think this dollar crisis could be a negative factor for equity. So, with the strong rally that we've had, somewhere along the line, you're going to get a correction. What could trigger that correction? There are two factors. One, a seriously decline in the dollar from these levels. Second, the unknown of any trade unraveling or even geopolitical concerns. So you need to be in the market, but you also need to be very prudent, and you also need to be ready at any given time to reduce your positions if necessary.
Peter, great to get across what you're seeing on markets. Thanks for joining us on Spartan Capital.
Thank you for having me.
All right, let's turn our attention to what we can expect locally on the equity market. Having made strong gains yesterday, looks as though we're going to add to that with SPI futures up more than 0.4%. Look, we're going to get a few more production reports today, but also data-wise, critically, we're going to get that quarterly read, that's December quarter read on inflation with CPI data released about 11:30 Eastern, and we'll get immediate analysis off the back of that. Of course, that will be informing the RBA as to its next move with the RBA meeting next week. Stay with us for the open.